Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 13th of November. The information covered this evening is general advice only. I'll be breaking the presentation up into two components. We look at portfolio investing. We'll conclude with a look at our trade table, which helps to identify short-term trades in the ASX, essentially the 20, the 50, the 100 and the 200 list predominantly. We'll tie all the analysis in with a look at the S&P 500 and the XJO, which we refer to as our index trading. As a reminder, being a public webinar tonight, we have members joining us that are on a free 14-day trial. At the end of the trial, you can subscribe to the service from as little as $110 per month. If you're more serious about your trading and you want professional mentoring and tutoring, we can look to upgrade your membership to the Platinum membership, and that's $4,400. And if you'd like to discuss that with me, please feel free to give me a call in the office on 1300 614 002. Up on screen is a graph of the Nasdaq. This is where all the growth is happening. We're seeing strong earnings, not necessarily from Apple and Microsoft and the large tech, but where we're seeing it is in the smaller cybersecurity, cloud services, e-commerce. We're seeing earnings growth come through at 20-25% in some cases. And that's driving another round of excitement in tech exposure, along with obviously just the overall adoption of AI. So the growth is real within this tech space. There's still some reasonable value, and there's some certainly compelling trading opportunities, but there's also some good investments, and we'll look to cover that separately in a specific recording around the US markets. But if I have time at the end, I might just try to touch a little bit on sort of what's been going on in the US markets, given we're in the middle of earnings season. But up on screen there, the Nasdaq, you can see there it bounced off the support there, created the higher low formation, rallied above the moving average. We've had a solid move higher. Our price target for the Nasdaq was at about 14,000 points, which puts us a couple of hundred points higher than where we are, or about 2%. It certainly looks at this stage that it has the momentum to achieve that type of target. On the S&P 500, our target was up around 4,500 points, so probably sitting in similar airspace where we're looking for another 2-3% move higher in the market before what we expect is more of a consolidation. And so the reason why the consolidation is needed is that the rally that we're having at the moment is partly because earnings are meeting expectations, but it's predominantly because interest rates have eased back, so inflation concerns in the US are moderating, and we're seeing equity, money flow into equities as a result of that. Our anticipation is with the US market at about 20 times forward earnings at about 4,500 for the S&P, it really should consolidate. So the momentum looks strong here at the moment, but likely to stall out at around that 4,500 points. On our local market, the XJO, today was a soft day. The resources remain fairly strong, at least from an iron ore perspective. The other base metals less so. Our market should have the capacity to trade up to sort of 7,200 points as a target, which would put us in line with sort of those moves higher in the US market. So I'd be willing to keep a close eye on our market. Another day or two of weakness, if that was to happen, would throw up some really good buying opportunities. And part of tonight was to set the scene as to which stocks you want to be focusing on. Always from a risk management standpoint, we refer to this as our pivot low. If that was taken out, our stop loss system, especially in the trading portfolios, would close out all the positions. And part of this evening's recording is that I'll dig in and review that trade table and help you to understand how those stop loss systems work from an automated standpoint. But our market, as I mentioned, rallied off the support of 6,900, broke 3 or 4% below that, which was what we forecast on the recordings. So off 6,750, we're now back almost at 7,000 points. Capacity up to 7,200, not too much above that. Let's have a look at what's gone on the advisory service over the last 7 days. Again, if you're joining us for your free trial, you would be getting these updates each morning. This just covers the opportunities that I'm focusing on, really where adjustments to the portfolios are being made, and again captures both a combination of investing and trading. The copper miners ETF is down about 30% from its highs, and we're simply starting to accumulate this from an investment standpoint. Domestically, keep an eye on this one. Altium have their investor day on the 16th of November. The momentum's been strong off that $40 and looking for that to move a little bit higher. For yield investors, so this is sort of a good safe one for your investor portfolio that generates a reasonable dividend yield, but Coles, after correcting from $20 down to $15, is back into our accumulation range. A little bit further out on the risk curve here, down a EDI, but the upside, if we're at an inflection point in their earnings, could be substantial. So it's one where you'd want to be running a stop loss below this pivot low here, but the momentum looks to be building above that 375 support there. Ramsay, we've saw the announcement come out today where they've offloaded their Asia partnership. Net, I think it brings in about 900 odd million after the sale, which they'll largely use that to pay down debt. So it starts to sort of manage that concern around the gearing there. The underlying business is performing quite well, and we remain a buyer of Ramsay as a sort of quality long-term recovery play. Reliance Worldwide, this is one of the stocks out of the trade table. We'll have a look at the performance of that in a moment. In the US, if you have any interest in US stocks, Intel's a really unique opposition within the chip space. I strongly suspect over the coming years they'll regain the leadership, which is obviously dominated by Nvidia and AMD at the moment. Intel's got the new products coming. They've got the new factories in the US. They've got the new supply agreements for the US government. Intel's something that we see as a good sort of 2-year risk reward play in the US market. Amazon was out of the trade table, so this is up 12.4% after being added into the trade table. Again, if I have time, I'll have a quick look at some of those US stocks. Back to the domestic market, the China, as far as instruments listed on the domestic market, but obviously not exposure to the Australian market per se. But the VanEck Vector China New Economy, this gives you access to an area which is heavily oversold. The likes of Alibaba, JD.com, Pinduoduo, some of the other leading tech stocks in the Chinese market here. It's corrected from around $11 down to $6.80, so we're buyers of this, and it's actually moving up the weighting in our portfolio at the moment. This is an interesting one, especially just even if you're sort of thinking about Woodside or Santos. So this is the oil futures, the correction down here, getting into an area where we're likely to see buying start to pick up. The momentum's still quite negative in Santos and Woodside, but we'll have a closer look at those as we go through tonight's recording and set up a strategy around those. But looking for oil to find support at around that 70, and ultimately that to reflect sort of where the right entry point is for Santos and Woodside Petroleum. Copper miners already covered that. Aristocrat Leisure, positive momentum, good stock if you're looking for a blue chip growth opportunity. Downer EDI, we've covered that. Tabcorp, make sure you make a note of that one. Take a look at it tomorrow. It had a really strong day off the session lows, and it just looks a good value down here at 80 cents. So take a closer look at that one. Lendlease, if you're looking for a sort of recovery exposure within sort of the property sector, Lendlease is our preferred allocation there. Altium I've already covered, and there we are, back to last week's webinar. So again, we've got clients joining us tonight as part of their 14-day free trial and part of our free public webinar that we do once a month. So let's jump in and have a look at the watch list. And I just want to cover a few more of the stocks that we've been sharing on our advisory blog and just give you a little bit of an insight into the thinking behind driving the opportunity. So we go in here to the recent blog posts, get the percentage gains to the top, put them in buy orders. So we're going to start by having a look through these, and I'll just share with you some of my thoughts here around Altium. This is a tech stock that can deliver double-digit earnings growth, so somewhere between probably 10 to 20% earnings growth. The correction from 50 down to 40 puts it back into a buy range. Look for hopefully a positive update on the investor day on the 16th of November. The market will be looking for guidance around their revenue growth continuing to meet their sort of 2-3 year target outlook. So we like Altium as an Australian tech play. Broader, if we're looking at international tech, this is one way of just getting a portfolio exposure to it. So that's the BetaShares Cloud Computing ETF. Switch from sell conditions there into buy, so value at around that 1050 level. Tabcorp, let's have a closer look here. So the rally started to get underway, and then it's pulled back below the moving average, but it's held off the support there, rallied today, closed back up near that 80 cent mark. So I've just set up a pattern here where essentially we're just looking for a bit more evidence of the buying support. But if you're aggressive tomorrow, you can simply just run a stop loss below 75.5 cents. And it is, this is a higher risk, certainly not sort of blue chip investment dividend play, although although obviously a well tested business. But you want to be more looking at running a stop loss on a position like that one there for your portfolio. Robo, we like this just from a thematic. We think this is where the growth sits in international tech. So being a buyer of that down here at around this $62 to $65 range. Again, this is a portfolio play ETF, the VanEck Vector Global Health Leaders. So again, this is sort of moving up the weighting in our portfolio. We're heavy buyers of it down here at sub $10. AZJ, we like this as a yield and a growth play for portfolios. So see value down here at around 340. Switch there from sell conditions into algorithm buy. Telstra, value here at around 380. The yield's attractive. The correction from 450 down to 380, 390 creates a buying opportunity. We're obviously well aware of the problems that Optus has been having. At the margin, helps Telstra a little, but with or without that, I think Telstra is a good opportunity for patient investors. This is a bit more speculative and offers a higher growth outcome. So the Cure, which is the global S&P biotech, here at around $35. I strongly recommend that you make room in your portfolio to add that in to add some growth to the investment returns. International small companies, so just to reflect what we've been discussing with members over recent weeks, is really just highlighting that the small caps have really underperformed globally, mostly off about 30 to 40% from their highs. Just to put it in context, we're trading lower than where we were pre-COVID. So at around $52, if you want exposure to international shares and you're looking for growth, adding small companies is one way to do that through that ETF. Coal's a little less exciting, but this is a good low volatility dividend player for your portfolio, but the correction from 20 there down to 15, we like that. Again, back into sort of more of an international technology growth theme here through the iPay. So this is an ETF that captures exposure to the likes of MasterCard, Visa, American Express, but also some of the more disruptive payment companies like Block and PayPal as examples. So portfolio approach to an area that's likely to continue to deliver good earnings. So the correction that we've had from 12 down to $8 is a buying opportunity. So again, make room for that one in your portfolio if you're looking to add a bit of growth. CSL, the correction here from 350 down to 250. As a target, you don't want that to represent more than about 5 to 7% of your portfolio. But definitely be a buyer of it and start accumulating some shares in that. Aristocrat Leisure, a good blue chip growth stock, continues to deliver sort of 10 to 12% earnings growth. And at 19 times earnings, you're paying a reasonable price there for growth. This is an undervalued sort of counter cyclical play, really. The property sector's really out of favour at the moment. The Lendlease has corrected from $20 down to $6. The company's got really low levels of gearing. Clearly, they got a really challenging operating environment at the moment, but you just really want to keep this on your watch list if you're not ready to invest in it at the moment. But really keep an eye on this. The momentum's likely to turn, and I suspect we really are getting very close to improving conditions, and therefore better earnings, better outlook, more positive statements from the company, and we could be getting close to an inflection point there. The global copper, so that's an accumulation, so it's down from 13 down to 10, so about 30% correction. I wouldn't be too aggressive here, but it's okay to step in and add some exposure to this into your portfolio. I think the downside risk to it's probably not much below sort of $9.50 thereabouts in a soft market. But that's kind of where I'm thinking as the range. We've started adding it into portfolios, but certainly got capacity to add more at lower levels. Amcor, reasonable opportunity here. You're buying it back at levels that Amcor last traded at, kind of 6, 7, 8 years ago. The correction down here from 20 down to $14 is a buying opportunity. The stock's yielding around 5%, and the fall away in earnings are stabilising. The Lottery Corporation, this is one really just from a trading standpoint. We bought it at lower levels, traded out of it. I'll probably take another look at it again, back down at 440 or thereabouts. It's not one that it's certainly not an overweight position in our portfolio. 7 Group Holdings, this came out of the trade table. We'll have a look at that a little bit later. Wesfarmers, I like this for investor portfolios. You really have to own this high quality business, likely to keep delivering earnings growth over the next 5 to 10 years. So you just want exposure to that. Vanguard Australian Property, so this is another way. If I had to kind of rate our interest in REITs and the property sector, it starts with the SLF and this one here, VAP, the Vanguard Australian Property Securities. Where we get growth in our property strategy is looking at things like Lendlease, looking like at the copper ETF, even sort of something like PEXA in the technology space. So we actually have a managed fund now that's only been launched about 4 weeks ago, but it's what we refer to as the Australian Property Accelerator Fund. And the reason, hence the accelerator component of it, is that we're identifying companies that are directly servicing and exposed to, in particular, the Australian property market, and we think that as an investment theme actually does pretty well over the next couple of years as a recovery play. So it's not just about REITs, it's about companies and commodities and other components that go into servicing the property sector. So yeah, if you'd like to talk to me about that Property Accelerator Fund, then please give me a call in the office. But certainly if you're looking at building your own portfolio with exposure to that, VAP's one way to do that. The CNU, the Chinese economy, that's exposure to Chinese tech, which has really been battered. Downer EDI, covered off on that earlier, but there's the support line. Any trade back below that, you'd want to have a stop loss in place. BlueScope Steel at lower levels, we'll add that into our Property Accelerator Fund, but we're just not quite buyers of it for that portfolio at the moment. Reliance Worldwide, let's have a look at that when I cover the trade table. Xero, really worth stopping here and having a look at what's going on. So revenue came in at about 21% growth. Profit was far better than it was last year, but a little bit shy of market expectations, and the outlook was maybe a little bit softer. Now, when the stock trades on such a high PE ratio, there's not much margin for error, but this really is a top quality Australian tech company, New Zealand tech company. We'll claim it as ours. But this is a name that you want to take a look at on this sell-off. So if we saw this any deeper, sort of down to sort of this $85, that would be a range where you start getting aggressive, but you could certainly start to have a look at it now here. Anything sub 100. We originally sort of flagged this at about 100. My commentary at that point was really let's just wait and see if we can pick it up at sub 100. We're getting into that range at the moment, so it's certainly increasing as sort of importance on my radar at the moment. Santos and Woodside Petroleum dependent on that support level developing in the oil prices, but I suspect in the case of Santos, you want to start looking at this down here at around $7. Traders, what you're going to do is watch for the momentum to turn, possibly get above that moving average, and then you're going to be long this with a stop loss below the pivot low. And if all that sounds a bit confusing, if you're joining us for the first time, just keep an eye on the daily advisory service and join us for next Monday night's webinar, and I'll continue to provide you commentary around that. Physical silver, we've taken profit there as we have with a number of our gold positions. Serra Resources not really doing too much there. Woolworths not doing too much there. Westpac. So what you've noticed, these last couple of stocks are under algorithm sell signals, and we're seeing lower lows, lower highs, so a little bit different to the patterns there that I was focusing on earlier. Cleanaway, so this has had a decent bounce off that $2.20 level that we flagged, so we've taken profit on it in our trading portfolios, but we don't mind Cleanaway long term. It's arguably priced to perfection, but it's a really high quality business that delivers 5-10 years of good solid growth. Northern Star, we've taken profit on that gold position there under the algorithm sell signal. Ramsey, that's in a downtrend, but we're thinking that that we start to see sort of an inflection point there and better trading prices ahead for Ramsey. The short Nasdaq, not doing anything there just at the moment, and then there we are back to Altium. So that was a run through essentially what's gone on the advisory service over the last 30 days, and hopefully that sort of gives you a good sense of the type of names that make up our portfolio, or at least changes to our portfolio over the last 30 days. To see what we're actually holding in the investor portfolios, you would go into this model tab here, and tonight I'll just cover off the top 20 because I've got a few things that I want to finish off on this evening. So let's just have a look at what's in the top 20 algorithm investment portfolio. This here shows you the number of days that it's been in the portfolio, and you simply turn the notifications on to get an email reminder when something's added. So let's just go through and have a look at these. So Woodside Petroleum's now in the model portfolio. It shifted from sell conditions there into buy, so we're starting to add that into portfolios on this sell-off. Transurban, we're buyers of this on the dip. It's still a relatively small position, but as interest rates start to come back down, we'll build up the position size of Transurban. Aristocrat Leisure, we own that just from a growth standpoint in the investor portfolio. Wesfarmers, so if we look at what's happened here, it's gone from sell conditions into buy with the subsequent signals there, and we continue to like that from an investment standpoint. Fortescue, iron ore has really been strong, and that's been one of our thesis, is that really the only resource exposure we've had is BHP, Rio and Fortescue, and we've stuck with Santos, so that's really made up our resource exposure. Iron ore prices remain strong, and Fortescue, BHP and Rio will all benefit from that. Rio under buy conditions, so we hold that in our portfolio. Macquarie has the risk to trade down around $140 or something thereabouts in a soft market. The earnings results were weak. The market kind of expected that. But really high quality business, and you just want to be a buyer of it on the dip. So, whether that gets, whether it ends up being 130, 140, but certainly sub 150, I would start to be a fairly aggressive buyer of Macquarie. BHP, we quite like that. That's obviously our number one resource exposure. Commonwealth Bank, we have some exposure to that, but we just don't think the Aussie banks are trading higher at the moment. ANZ's our preferred bank, so we prefer ANZ over CBA just on valuation grounds. the bank results came in line with expectations, even though there's fears that bad debts may be increasing. There's no evidence of it just yet. So we stick with ANZ and CBA. CSL were buyers of that. Santos again switched from sell conditions there into algorithm buy, supported around $7, so we hold that in portfolio. Coles, the correction from 20 down to 15, we hold that. Telstra, we like that in the investor portfolio, and there we are back to Woodside. So again, if you haven't activated your free trial, jump onto the Investor Signals homepage, either restart an existing trial or create a new one and start following the investor portfolios. This is new technology that we've added, which is the trade table. So let's just recap what's gone on here. So you got the top 20 trade table, which doesn't give you too much work there. There's not many positions that you have to keep on top of, but the performance there is solid. You go to the top 50, obviously you get a couple of more holdings. So you can see here the holding times is often sort of somewhere between 7 to 45 days. If we go into the top 100 portfolio, you can see a few more holdings. And let's just go through these and have a quick look at the patterns. And I'll just point out the importance of the stop losses and where they're placed across these stocks here. So let's have a look at it. So in the case of Cochlear, the trade table's gone into this position off the back of the buy signal, the green arrow, and as the momentum continues higher, it'll stick with it. If that momentum reverses, you'll get a sell signal on a momentum basis, but you've also got a stop loss on a reversal below this pivot low here. So you can see there the pivot low is 237. If we go back to the trade table, you can see the stop loss there's 237. So as we go through these from a short-term perspective, NIB, buy signal green arrow, that's now in the trade table. WiseTech's in the top 100 trade table. Reliance Worldwide's been in there for a little while now, but the momentum's still positive, so we're sticking with that one. Wesfarmers again been in there a little while. The momentum looks okay there. 7 group holdings. Buy signal green arrow, we're participating in that momentum then. There we are back to Cochlear. So if we have a look, you can see here the best performing stock 7 group, which is up 6.9% after 19 days. Sorry, Reliance is the best performing stock, up 8.3% after 13 days. So a couple of ways you can reorganize this. So I've just clicked on the days held, the least number of days held, or we can play around with this percentage column here and see sort of which ones sort of the lower or least performing stock and which one's the best performing stock there. So in the case Reliance and 7. If we go down and have a look at they're the open positions, so they're obviously all profitable. Here's a record of all the closed positions and whether it was closed out under the momentum rule or whether it was under the stop loss condition. And then if we go down even further, you can see the performance. So we've given up a little bit of gain in throughout sort of the slightly softer, the market's been predominantly moving lower and prices have been a little bit choppy, but still for the year the top 100 trade tables up 10.6%, and if we just have a look at that in comparison to the top 200, quite a few more positions as you would expect, and if you go down to the performance here, the trade table's up 25.5% year to date. As I promised, let's just have a really quick look at what's gone on in the US market, and we might do that just through the trade table, just to bring tonight's recording to an end. So let's have a look at from the US S&P 100, so the top 100 stocks by market cap in the US. This is the trade table. If we have a look at which names are doing well, so Bookings is doing well, Amazon in particular, so let's just jump in and have a look at that. So we can see here buy signal green arrow, and we're participating in that upwards momentum there. If we have a look at how the overall performance of that trade table is going, we've had a really strong rebound in the course of the last week or so. So the US portfolio was up about 6.4, now it's up 11.2%. So really strong rebound there. Obviously the same situation, stop losses are in place. So the great thing about this trade table is as soon as market momentum starts to fall over, we're back in 100% cash under the momentum rules shifting to sell conditions. If we have a look at sort of one of the higher growth areas, the Nasdaq, let's just see how that performance there. Really strong rebound for a gain from 6%, now up 13%. And if we have a look at our proprietary list of technology disruptors, this is sort of an area that I find particularly exciting. Let's have a look at how this is performing. This is a selection of sort of hand selected stocks that I feel are likely to continue disrupting the technology space, and therefore are likely to have fairly strong share price performance over multiple years. Now, interesting, when we look at the performance of the trade table in this area, it's the best performing trade table for sort of having less than sort of 100 stocks in the portfolio. It's up 13.7% year to date. But what is interesting here is the stability of the returns. The sell-offs have been quite minimal, and we've had a fairly steady run there of capital gains throughout the year. Thank you for listening in this evening, and hopefully you'll join us again next Monday night, and keep an eye on what goes on the advisory blog. As I mentioned at the beginning of the recording, if you're wanting to sign up and become a member, you can join for as little as $110, or if you're looking for more mentoring and our platinum membership, please give me a call there on 1300 614 002.